Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at Coinbase. COIN. Out here in The Pride, we only invest in trends that are going to last the next decade or more. And today's trend is cryptocurrency. It's no secret that we're in high inflationary times, the worst in decades. Every day, our money continues to lose value, and let's not even talk about gas. Bitcoin was the first time a constant was introduced into finance, and a lot of people think the opportunity in crypto land is completely gone. I'm here to tell you otherwise. You can see the trajectory of crypto has gone from 5 million in adoption in 2016 to a whopping 221 million as of 2021, and those numbers are set to continue to grow exponentially. US, UK, and Canada have Coinbase as the #1 marketplace. Coinbase charges transactional fees for every single transaction on their platform. My question to you is this: do you see a future where cryptocurrency goes back into the cave it crawled out from? Or do you see it playing a vital part in our financial world? Case in point, Russia versus Ukraine. Join me as I explore Coinbase as a company. We do the financial analysis, the technical analysis, and everything will be timestamped below. If you like content like this, don't forget to like and subscribe. With that said, let's jump into it. Cryptocurrency is still very early in its life cycle. However, the viability and success of crypto is by no means guaranteed. The success of Coinbase, however, is very reliant on Bitcoin, Ethereum going to the moon. Coinbase has no moats right now. There are over 300 companies that can create the marketplace to trade, buy, and sell crypto. But Coinbase is the #1 company here in the United States because they've created a reputation for themselves. They're a reliable and compliant place to buy and sell crypto in an industry that's filled with risk and weak security practices. This intangible asset has allowed Coinbase to charge more than the competition. They charge more than Binance and pretty much everyone else in the market. And this is giving them the ability to increase liquidity. Over $7 billion in revenue last quarter is no small feat. It also can be seen as over earnings because they went completely bonkers compared to the previous quarter. And with weak expectations going into 2022, this could be a good and bad thing for Coinbase. Financial exchanges in general often benefit from network effects. As more buyers and sellers utilize a financial exchange, the order book deepens, the bid-ask spread tightens. And this allows Coinbase to have less impact. And this is really good for you and I that use the platform. The less impact on our savings would allow us to use this platform as opposed to going to another competitor that is actually cheaper because we have less price fluctuations from day to day. And cryptocurrency custodianship is a key part of Coinbase operation model because right now, if me and you were to buy Bitcoin and sell Bitcoin on Coinbase, Coinbase doesn't have to record that on the blockchain. They only have to record that if we are taking that out of the platform because they hold all of that. And this has allowed them to have over $200 billion in client-owned cryptocurrency on its platform. That's roughly 11, almost 12% of the total outstanding market capitalization at the time, which was just outstanding for 2021. And that was just the first quarter. Right now, we have a fair market value of $210 per share. And this fair market value is heavily dependent on trading volume. We have the assumptions and our rates around the bullish and bearish situation in the market. If the market goes up, then you can see Coinbase trading to like $400, maybe even $500. But if we're in a bear market, because they make their money on the transaction and people are less active during the bear market, it could push that price target down into the 200, maybe even $190, which is where it's actually trading today. Coinbase receives majority of its revenue from trading fees, like I said before. And if we can have this model consistent going forward, then crypto market going into a bull cycle would take Coinbase all the way to the top. Our model projects that cryptocurrency market will reach a total market cap of about $9 trillion by the end of 2031. And if Coinbase holds this position as the leader in the United States and their plans going globally, Coinbase could really, really take a big piece of that pie. I like the bullish case around Coinbase. It shows a lot the dominance for this company going forward. Coinbase has established itself as the leading US cryptocurrency exchange with a strong reputation for reliability and being a risk-off type of platform. Coinbase has been able to accelerate the rate at which it lists new cryptocurrencies, giving the company more exposure to the growth of the asset class. The more coins, the more money that Coinbase can make. The global market for cryptocurrency continues to grow, and regulatory approval from international regulators will allow Coinbase to expand, and this expansion will allow it to have a global presence. If it can create the same reputation that it has here in the United States globally, Coinbase would be unstoppable. The bears have a clear argument against Coinbase, so we have to hear them out. Cryptocurrency markets have historically been deeply cyclical. They have these long periods of bear market followed by euphoric bull markets. During the bear market, Coinbase has very low volume, bad for the business. During the bull market, though, a lot of money can be made. Coinbase sterling reputation can be hit really hard if they were to be victims of theft. So far, the structure around the business with their custodian and using cold storage has kept them pretty safe, but who knows? The last part is the regulatory landscape, and the long viability of cryptocurrency is still unclear. If governments were to attack this particular industry, we could see Coinbase be insignificant enough. All investments come with risk, no reward, and Coinbase is no exception to that rule. Currently, the risk around Coinbase is all around the volatility in the crypto space. They have big bullish cycles, big bearish cycles, and Coinbase makes their money, majority of it, from trading volumes. The trading volumes are low, no money for Coinbase. And this is what's noting. The volatility does help savvy traders, but if you are investing in Coinbase, it's important for you to invest during the bearish cycles and take profit during the bullish cycles. That would be the best way to. So when I'm looking at these companies, I like to look at the year range. You're looking at 150 to 429. 429 was when it first IPO'd. It came out when Bitcoin was heading to 69K during the euphoric cycles. Those prices were super duper high. It's since got very humble and hit $150. I see the P ratio at 13, not bad. There's no dividend, and you know your boy likes to get paid to hold. With that, let's go straight to the numbers. On an annual basis, you can see this huge trajectory. I like to jump into the quarter to show you something really interesting. This is not bad, right? And then you see that drop in 2020, September 2021. But this right here is the big issue. This could be seen as over earning because they went over 2 billion for the December quarter, and they had forward guidance that expects them to have a lot of expenditure going into 2022, and this would hurt the bottom line in the next earnings. The company has to hold a lot of cash and cash equivalents because of the nature of this particular industry. During the bearish cycles, it would be nice for Coinbase to have a lot of cash on hand to cover all of their debt and still stay afloat. Profit margin of 46% is pretty awesome. We like 20% in the profit team. Imagine what 46% does to us. Super excited. Revenue of 7.8 billion for 2021, 3.6 in net income. All of this is exciting stuff. This is why the CEO of Coinbase was able to buy one of the most expensive mansions in the history of history. All of the news we're going to go into, you can actually just jump on Google Finance and you can check those out. I like to show the 5-year range to give a clear example of what I was explaining with the euphoric bullish cycles. and the very bad bearish cycles. These are the major risks involved in trading this particular company. I'll be showing you the details when we do the technicals. With that said, I would like to look at a couple of things that I like. Citigroup just had 275 price target, dropped from 300, and you can see price targets for Coinbase are a low of 220 and a high of 500. So you can do 160% if you have a euphoric cycle within the next 8 to 12 months. Or you can see it stagnate between 220 and 342. It's hit this number really quick. Things move really fast in the crypto world. There is no dividend like we talked about. The PEG ratio is unavailable right now. The numbers need to come in for this company. Again, it just started trading recently. I think it's less than 2 years in the market. EPS of 12.88 is pretty significant. We did see the company has high profit margins. This business has been around for 10 years, and in that time, they've been able to dominate the space and take first position here in the United States. We would like to see this company go global and see how they can play the crypto trend. With that said, let's check out the technicals. Trade to say the least. You can see when it came out on IPO, this thing had an amazing run. It went into the high 400s and then it just fell off. And then we saw a little pattern that developed when it started trading. We bought support. This was our support level right here, 229. And it shot off within 6 weeks to a high of over $360. We took profits, and since then it has fallen humbly to the bottom of the ocean. And now we can see a little bounce, but we need proof of concept for us to say what this thing is doing. The floor is $150. Support should turn to ice. Ice being when resistance and support are on the same line. 208 used to serve as support. We would like to see that turn into, it's already turned to resistance in my opinion, but we'd like to see it break past 208 and sit on 208 comfortably before it takes off and breaks through these levels, 228, 238, which was where we took our bounce from. And then when it breaks 282, we could be on our way to $360, $400. But if you like to buy the dip, this company is as low as it gets right now. 150 is the floor. It's currently trading at $191. We would like to see bullish momentum run into the entire crypto market, but this could trade sideways or it could give us a new floor. There are a lot of things to consider with this particular company. And I believe I have shown the bullish, the bearish case, the risk involved. If you would like to see how we are trading this particular company, all you have to do is like and subscribe so you can see when we post videos like this. Hit the Patreon link to come join us in the pride. We're an amazing group of individuals. We trade, we invest, we do our analysis, we do the simple things consistently, and we would love to have you. With all of that said, I hope I've given you the conviction to buy, hold, or sell. It's Muphasa El Matador. Peace.